Hello and welcome, I'm Sriyash Maheshwari and you are watching Last Tick here on News9 where we break down the day's action on Dalal Street. And the bulls, they are back and they are back with a vengeance. Indian markets on Thursday posted strong gains across the board amid favourable global cues after the US Federal Reserve kept doors open for 3 rate cuts in calendar of 2024. Nifty is back above 22,000, surging 0.79% or about 172 points today. The index, by the way, is back above its 50-day moving average after 2 sessions below it. And that's a big positive. Remember, midweek, we had broken below it and this was a first slip below the 50 DMA since November of 2023. So that was a big, sort of a sentimental dowser, if you would like to call that. So let's just look at it as a first win in several battles that will follow from here on for bulls. But is it all sunshine and butterflies out there? No. Most of the gains that Nifty saw today came, right at the opening, meaning there was no follow-on buying. Also, Nifty has made a spinning top, sort of a price chart, sort of a pattern on the price chart, which indicates indecisiveness in the markets. And again, remember, today was a weekly FNO expiry, so maybe some of that upside was a result of short covering because, as I said, the markets opened gap up, so that perhaps could have squeezed out some of the short bets from the system. So keep all this in mind. I mean, the texture overall does look positive, but we will have to see follow-on buying, and that that is something that we'll need to track in the days to come. And to answer that and more, Mr. Amar Deo Singh, Senior Vice President of Research at Angel One, joins us. Thank you for joining us on the show, Amar. You still in Dubai? How is the weather out there?
Yeah, I'm just back last night. So at 4 a.m. this morning, I've returned. So weather's good there. Weather's been pleasant.
All right, because the heat is starting to pick up here and the markets, they are, the heat is getting there as well. I mean, look at the day's performance. I mean, all thanks to this dovish commentary from the US Fed. And I'll get to it in just a bit, but Nifty, sir, it's back above 22,000. The broader markets, they are doing phenomenally well. Volatility also slipped today. I mean, that is certainly to improve, show that the sentiment is also improving out there. So, lot of positives for us to celebrate. But the big question really is, will there be follow-on buying when we come back tomorrow?
I think that's a very good question. We also need to remember that today was the weekly expiry, so there's been some movement with regard to that because there were expectations that markets could correct. But as you rightly said, the US Fed's statement that the markets are anticipating that there could be a rate cut in June as well. So I think that the markets have taken positively, which has definitely supported the markets. And also, if you look at the broad-based sense, so we've seen some pullback in the mid-cap and the small cap this week. So they are up by almost 0.7%. But that you can say is more of, I would say, some sort of pullback after the correction which we have witnessed. But some positive figures there that we see India VIX trading around 12.5. So that definitely is a positive. And the markets are actually looking for some sort of further triggers. The US Fed statement definitely is one of them. Also, if you look at the derivatives data, if you look at the PCR for the next week, that stands around 1.1. So that's, I'll not say mildly, it's not bearish per se, but it's not very bullish though. And looking at the heavyweights, we've seen that TCS and Infosys, they have cracked this week. They're down by almost 5%. But rest of the heavyweights, be it the banks or Reliance, they've maintained their ground. And if you look at the advanced decline today, also that's been significantly in favor of the bulls. So it is a tussle. It's a tussle, and the range what I see for Nifty is somewhere around 21,700 on the downside, 22,200, 300 on the upside. So that's a 500, 600 point range which Nifty is likely to trade in. And looking at the short-term charts, they are clearly trendless, honestly.
So the sentiment certainly has improved, as you also pointed out. On 13th March, the advanced decline ratio was 1:22, meaning 1 share rose for every 22 that fell. Today, it has improved to 4:1. 4 shares rose for 1 that fell. But, I mean, on a day like this, when there is an overnight event, if there is a positive news out there, most of the upside gets factored in right at the open. And, for the average investor, not much is left, sir. So what do? I mean, they are pretty much just left scrambling for crumbs.
Yeah, so if you look at the markets and if you look at the traders' psyche, or psychology, you'll find that the professionals are more active towards the end of the day. So
Right.
if they are confident to a certain extent, they'd like to carry their positions the next day. And that's what we witnessed, because they definitely have some perception as to what is likely to happen or what the US Fed is likely to weigh upon. So I think that's one area where the professionals score over the, I would say, the amateurs or the rest of the traders in the market, because the rest of the traders would like to jump in when the market opens. And jumping in just when the market opens is never a good idea. You should give the market at least a 15 minutes time period to settle down, at least from 9:15 to 9:30. Post 9:30, you can decide what action you wish to take, whether on the long side or the short side, based on technicals, based on derivatives, or based on any other data which you analyze. So I would say that's something one definitely needs to look at. And what we've seen is when the market is opening strong or is closing strong or firm, or there's some very strong derivatives data which is there, that generally helps the market. But you have to keep only one thing in mind, that on expiry day, none of the derivatives data really works, because it can change on the flip of a coin. So that's one important point that I definitely like to highlight.
No, I think you shared some great insights over there. The investors, I mean, I've been talking to a lot of people who have just stepped into the market. They are like, when there's a big event overnight, what do we do? Should we start betting right away on the market? And that's a great point that you just mentioned, that, wait for the dust to settle, wait for positions to spread across the board, and for like 15-20 minutes before taking that positional bet. I mean, we see this time and again, the markets will open gap up or gap down, but there would not be follow on buying or follow on selling. But let's talk about the Fed decision. That was the biggest overhang for markets this week. No rate cut as was expected, but Amar, the stance seems to have shifted. It's sounding more dovish now. Mr. Powell pretty much brushed off the hotter than expected inflation print in January and February. He called it merely bumps in the road, and they still expect 3 rate cuts this year, unless of course the inflation situation from here on gets much uglier. But I have a few questions here. The biggest, of course, is when is that first rate cut going to happen? Because most of us, are predicting June to be the first time when Fed goes for a rate cut. But can we see it in May? Is that an outside chance? Because he's sounding dovish. More and more MPC members are also, tilting or favoring a rate cut at this point. And my second question is, sir, the commentary. I mean, a lot of us are looking at this as super dovish. Are we making, more than it actually was?
See, actually, markets generally have a tendency to make it more than it is, whether on the bullish side or the bearish side, because markets are to a very great extent driven by emotions and the data flows which is there. So if you look at the US Fed statement for, I would say, last 3-4 quarters, it's been more or less steady and along the expected lines. And also there are very high expectations, because if you look at the consensus percentage, that's also moved up significantly. That's around 77% prior to less than being 60% the previous day. So what it tells about is that there are really expectations that until unless something or unexpected event happens which has a significant impact on inflationary trends, not only in India but globally, that could be a showstopper. But otherwise, having said that, US Fed is definitely in line for rate cut in June. That's what the markets are also anticipating, and that's what the markets have also factored in. So having said that, if that's the case, then we could see some definite, I would say, cooling off of the interest rates, because that's at I would say 23 years plus high. So there is something, and that is definitely a cause of concern for the US also, how they actually manage the inflation while at the same time bringing the rate down. So markets are in anticipation of that, and it could happen as early as June, provided we don't see any unexpected event which could lead to slow down in that action.
All right. So no rate cut in May probably, but June is when we can expect the first step towards monetary easing from the US Federal Reserve. But Amar, got to ask you about RBI too. I mean, inflation in India has been coming off nicely. It's been below the upper band of the tolerance limit, which is at about 6% since September of 2023. And even some MPC members, they are sounding more dovish now. In fact, Jayant Verma in the last policy meet voted in favor of a rate cut, and he was, by the way, the first member to do so since May 2020. Other members like Ashima Goyal, they have also said that the case for rate cuts is now getting stronger. I mean, is it finally going to happen in April, Amar?
See, the chances are definitely there, because RBI definitely has managed it quite well so far. And RBI would definitely want to wait and see how because we will have the monsoon season also approaching, so that would have some impact over there. But overall, RBI is on the right side, and they are going slightly cautious there because they want to keep things in check as well, because inflation definitely, if it starts peaking out, so that would be a cause of concern. And the best part is crude oil prices, energy prices have really helped us, not only us but the entire world, despite the Russia-Ukraine war. So that has really helped the global markets as well as the Indian markets. So I would say, yeah, we are in line until there is something which comes up. But more or less, expectations are definitely factored in by the markets in India as well.
I mean, but sir, consumption has been sluggish. Private capex has not picked up. RBI could potentially kill two birds with one cut if it goes ahead with an April rate cut.
That definitely is a possibility, but at the same time, we'll have to watch out for as to how is the trickle-down effect. Because a rate cut happening, how much is, or how quick or how fast is this passed to the consumers, end consumers, that's something which is of, I would say, even greater significance or more importance. Rate cut definitely is one, but the passage of the rate cut benefits to the end consumers, that's something which is really going to be quite important and interesting to watch out for, if and when that happens.
All right, and before we let you go, oil has been a major concern for our markets. Remember, we are net importers of oil, so a surge in oil prices does not bode well for us, and for several of the industries, because it's an essential raw material, so their input cost definitely goes up. But we saw some bit of a technical pullback overnight. Oil prices have slipped by 1%. It's back below $87 a barrel, and OMC stocks, they have done fairly well, and they have been, OMC stocks, they have really suffered from this fuel price cut that happened earlier last week, as well as the surge in crude prices. Some of them fell as much as 11-12% in just matter of days. Is that a concern still? I mean, OMC stocks, or do you see them making a turnaround?
So if I look at the OMC stocks, first talking about crude oil prices, we've definitely seen a pullback in the crude oil prices, be it the Brent crude or the US crude, NYMEX crude. So there has been a pullback there. And looking at our stocks, we've seen some sort of correction there. See, we have to understand is that they've rallied significantly. If you look at the likes of ONGC, if you look at HPCL, BPCL, if you look at IUC, they've all rallied significantly. So a correction, I would say, has been there, and it's more or less on expected lines. So I wouldn't read much into it unless we see some significant breakout breakdown from these levels.
All right, and I mean, after a 7 or 8% surge in a matter of week, 1% pullback is nothing, and that too is a technical pullback. WTI contracts, some of them expired last night, and perhaps that is why we are seeing some bit of a pullback. But that is one particular space I think one needs to be cautious about. Crude oil, remember, that could spell trouble for us in the months to come. $90 a barrel, as a lot of these experts have opined, will be an uncomfortable zone. We are and we are about $2-3 shy of it. But Amar, great insights from you as always. Thank you for joining us and sharing your thoughts on News9.
Thank you for having me on the show.
All right, with that, it's a wrap on this edition of Last Take. Thank you for watching. We'll see you tomorrow at 9:45 AM with First Take. But up next is Mrs. Plus.
Start with the end in mind. You need to know where you want to reach. Every morning that we wake up, we are exercising our choice. The destiny is decided. The results are known that I'm going to win. Life of a goalkeeper is something which has always intrigued me.
When you come into a stadium, this is the highest level of pressure.
When I set out to do something, I decide in my mind that failure is not an option.
What you feel very strongly about, those are the stories to tell.
I have a mind which is absolutely restless.
Mind and body are entangled sensations.
That brings me back to golf. It's an amazing game.
This is not a perfect game. You only learn from them.
If you have a formula to a success, then you can replicate it.
I feel this is my first step. I'm starting now.
winner is first born in the mind. I think, therefore I am. We are all about our mind.
This and more. Streaming on News9 Plus. Subscribe and get free vouchers.
Hello and welcome. You're watching Business Plus. We're bringing you stories from the world of business policy and economy. Do you often feel that rich are getting richer and poor poorer? It is actually true. There is now data to show that income disparity in India since early 2000 has grown multifolds. In fact, India's top 1% income of the people and their wealth shares have reached historical highs and are among the very highest in the world, according to a paper released by World Inequality Lab. By 2022-23, the income share of the top 1% population was 22.6% and the wealth share rose to 40%. This among the very highest in the world, higher than even South Africa, Brazil and the US. In fact, the top 1% earn on an average 53 lakh rupees annually, which is 23 times more than average Indian income of 2